Hello, I'm Tony Kaye. Welcome to the Economic View. I'm joined by Evan Lucas, our market strategist.
Hello, Tony. How are you?
Yeah, good, Evan. Evan, are you an optimist or a pessimist?
I'm an optimist. I mean, I know that at the moment, this is the thing that we're talking about is consumer confidence, business confidence this week took a big hit on the business confidence. Let's look at consumer confidence first. It did take up, so there you go. There is some optimism out there. It moved up 2.5%, but it's still at 97.5, which is below the optimist's level. It means that it's 10 consecutive months. That's the longest streak since 2008 on the pessimist side. And it's all the same things that are really dragging down the consumer confidence side. Household finance, basically general costs, energy prices, government intervention, and wages.
I can understand it.
You can, yeah.
Yeah, I mean, there's not a lot to be happy about, Well,
yeah,
there is, but you know what I'm saying. I
do.
There's not a lot.
This is that thing at the moment. This is the interesting thing that is, from my perspective, always good to look at with regards to those confidence surveys that come out. Is that it's not it's a quantitative. It's not a qualitative sort of piece of data because it's a relationship, and that's what happens with the survey. But it does give you that really good understanding because they're asking you the direct question of why are you feeling the way you're asking? Why are you under pressure? And look, household finance has been a big headwind for the 10 months. And realistically, even when we were in confidence over 10 months ago, the reason that it wasn't higher was because, again, household finances were questioned. And we know, we can listen to the level of debt. I mean, the average across basically the 5 capital cities, so not the whole country, but across the 5 capital cities, the average mortgage now is over $500,000. So there is that pressure there. We've talked about it many times about wage growth on this program, and wage growth is dead flat. In fact, it's just beating inflation. So it's not hard to see why the consumer's response is that. Interesting, though, that if you look at consumption in the GDP, it's still pretty strong, actually. And that comes down to personal consumption. So, yeah, pros and cons.
Yeah, I think probably overhanging a lot of the interest is interest rates, what's going to happen with interest rates. They have been sort of creeping up on the retail level.
Yep.
Then again, the data is showing that people are fairly optimistic that house prices will keep rising.
They are, and that's the other thing about why it's a relationship data is that yes, over 50% or just under 50% believe that house prices will continue to grow. It's about 30% that says that it'll probably stay the same, and there's only a very small handful that believe that house prices are going down. So there is that media input, and actually let's talk about the business confidence numbers as well, because the business confidence numbers fell 7 points. It's still growing and optimistic at +5, but that's a huge decline. Now, NAB's pointed out very clearly that you can probably take that with a pinch of salt. We had in the last month North Korean issues. We had the issues around interest rates as well. We also had some government intervention concerns. Energy prices are clearly one of them. Banking regulations and the AUSTRAC scenario with CommBank, they sort of say that as part of the reason why confidence in business fell away. But they're also the same thing, right? In terms of if you have a look at the fact that their conditions are at record highs, they hit another record high in their series. But the headwind is the same as sort of on the other side of the confidence. They have future expectations, government intervention, and costs. Now those costs are energy and wages. Now that gets back to the other side on the consumption, that the part of the reason why consumer confidence is low is because they don't expect their wages to grow. Part of the headwinds on business confidence is that they expect wages to increase and put pressure on margins, which is part of the operational costs of the business. So there's this push-pull factor, and could explain why they're not necessarily marrying up, because we have gone through a period where businesses have had to work very hard to consolidate to try and continue to grow in a low growth environment. We've had the GFC, we've had the Euro crisis, and we're coming to the back end of that. But it's also getting away from that mentality of what's happened over the last sort of 7 or 8 years, or particularly over the last 18 months, where we have moved away, is breaking that old mantra to what the new mantra should be, which is more optimism, but it's not translating yet.
Yeah, and on the business side of it, you've got some businesses that are reinvesting back into their business.
Yes.
A lot aren't.
Yep.
And at the smaller business level, I suppose, you've got all these threats which haven't really come to fruition yet. We know that Amazon's coming. Mm-hmm. There's a lot of fear factor around
that. And that was a real key standout and actually NAB themselves highlight retail It's the only sector that's actually pessimistic in terms of its outlook. And that is clearly the Amazon effect. We know what Amazon has done globally. The case that I think I really like to highlight, which is a fairly similar market, is what happened in Spain. Spain had a fairly similar starting point to what we do with regards to a fairly low to almost non-existent online presence in terms of what Amazon does, a distribution chain that needs to be changed, and around about the same population. They're a bit bigger, they're 36 mil and we're 24, but it's fairly similar. Within 18 months, the online presence of Amazon and the online consumption from Spanish consumers was through the roof. So it went from roughly around about sort of 1 in 4, 1 in 5 Spanish consumers use the internet to almost being 1 in 2. So there is a reason why the Amazon effect is a massive threat and why it will be a huge disruptor. And those that haven't probably put the time and the money and the investment into improving their omni-channel will find things very interesting with Amazon, and they're not far away. I think it's 30 days before they land.
Yeah, very close.
So again, that gets back down to this business confidence, consumer confidence. It'll be interesting to see the consumer confidence side and the consumption side with an Amazon in here as well, because that is retail.
Yeah, and I read today actually that Woolworths is starting to beef up its online distribution channels and also its pickup channels. They're doing some trials in a number of their stores. So.
They are. So, and that again gets back down to that whole Amazon thing and what you've been seeing in the States with the acquisition of Whole Foods. Same principle idea. Staples. So Amazon Staples is clearly going to be a big driver as well. So disruptors gets back down to the idea that disruptors are a positive and a negative. So on a conditions are perfect for them to come in here. What it means for confidence in business is clearly shown in those retail figures on the subcategory. And again, the confidence side from consumers is the next question. Am I getting a better price point by having online? Probably. And it may actually be a positive on that side, that you can actually consume the same product at a cheaper price. So that will be something to watch. The other thing that I saw this week, and I know that we've been discussing it, was personal lending at the start of the week. It's not something we normally concentrate on, but it was decreasing. So personal loans year on year and month on month have been going backwards. Leasing and also corporate loans are moving back. And that again gets back down to the original thing you were talking about there, Tony, interest rate probabilities. I mean, we've seen other central banks raise rates out of cycle and out of consensus. I still believe the RBA is out of the market, but there is the growing optimism and the movements that we've been seeing in trade balance numbers, etc., does put GDP on the upside, and that's therefore might be their excuse to move rates. We know that Philip Lowe is much more hawkish than his predecessor in Glenn Stevens, and he wants to start trying to normalise policy. The question is what it does. I mean, if he was to compress consumer confidence even further by, I'm going to start raising rates by 25 basis points. If your home loan is now going to go from an average of 4 to 4.5% to 4.25 to 4.75, and realistically the banks might go harder still, that's going to put a big depressor. So it's a really finely balanced sort of scenario at the moment.
Absolutely. We'll leave it there. Thanks, Evan.
Thanks, Tony.
Join us next time for the Economic View.
International equities. A study by the Australian Stock Exchange shows 75% of Australian investors only hold ASX-listed stocks. The Australian market makes up a small portion of the global economy, and without international exposure, you miss out on dynamic economies like the US and Asia, which can diversify your portfolio and boost returns. Investing in the InvestSMART International Equities portfolio gives you instant diversification across the globe through a hand-picked selection of exchange-traded funds. Diversify your portfolio and gain exposure to the globe's most successful companies. For more information, visit investsmart.com.au.